Hello and welcome to Crux Investor. We caught up today with Paul Cronin, CEO of Adriatic Metals, listed in Australia and here in the UK. Had quite a run of it. They've just released their PFS and we talked through that. If you want our thoughts and opinions on the PFS, the conversation and indeed the company itself, which we will be doing a full market report on in the coming weeks, you can go to cruxinvestor.com/club, where you can also find other company reports, commentary from market experts from around the world on a variety of commodities. There are training videos on there, summaries of other interviews that we have done. And of course, there's a big thriving community of investors sharing their thoughts and ideas with each other. If you go there now and sign up for the waiting list, you'll be eligible for a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments below. And if you want to take a look at what we talked about, take a look at the description. Paul, how are you doing, sir?
Good, Matt. How are you?
Not too bad, not too bad. I see it's Dress Down Friday there.
I'm in my uniform, Matthew. I'm very proud of it. Thank you.
And where are you?
I'm sitting in our office in Tisopsy, just in the hills above Barish, overlooking a desolate plant site that's about to get deconstructed and ready for construction.
Fantastic. Well, you're going to tell us all about it. You're going to talk about the pre-feasibility study in a second, but give us that 1 minute overview of what it is that you are for people new to this story.
Sure. Adriatic Metals, a Balkan-focused precious and base metals explorer, now developer. We have obviously our prime asset is the Barish project in Bosnia and Herzegovina, high-grade, silver-dominant but polymetallic, massive sulfide flotation project. And then we have now the Raska project in southern Serbia, which is lead, zinc, silver, gold exploration that we have recently acquired and are currently drilling very aggressively. Fantastic.
I like it's I like a polymetallic story because you get the flexibility depending on what the commodities are doing. So it's silver dominant. That's what we're going with, is it?
It is very much silver dominant. Silver is the biggest revenue contributor to the project, followed by zinc, then gold, lead, copper, barite, and antimony.
Brilliant. Okay. Well, look, you've just released a PFS, or what looks like a summary of a PFS. Can we get the full PFS anywhere? Where should I be pointing myself?
We obviously, Australian and London companies, unlike Canadian companies, aren't required to disclose the full technical report. Our technical report is being written in a JORC format because we are compliant with JORC in Australia and the UK. To get the report to be able to be released to the Toronto Stock Exchange, or CEDAR, which we can do, we would have to have it redone in a 43-101 format. I'm just not prepared to do that. As I said in an interview last night, it would be much easier if the Canadian Securities Commissions allowed us to report under JORC as foreign issuers, but they don't. And so, unfortunately, all of their rules that are intended to increase disclosure actually work in the opposite direction.
Right. Well, to answer the question, we'll be able to access the JORC version in a few weeks, will we?
We ordinarily wouldn't publish it. What we have done in the release is put enough detail in there that people can get a pretty good view of the study, all of the risks, all of the opportunities that were identified during that, and obviously the key financial metrics behind it. What we will do over the coming weeks in some of our presentations and corporate communications is provide a little bit more detail. We have had some constructive feedback, I would say, from some investors saying that they would like to see a more granular information. So we will be doing that. And we'll also be trying to separate out the metals from the industrial minerals. So effectively gold, silver, copper, lead, zinc from barite. Because the barite is such huge tonnage on a unit cost basis, it skews the numbers a little bit. And I think it would be more beneficial to see what the metals cost is, whether that's on a per ton basis or an AG EQ basis, versus what the barite does, because the barite, it has quite high transportation costs because of its quantity. So because you're storing so much of it at port, but also in terms of its processing cost per tonne is quite high as well. And it's reasonably capital intensive just by virtue of the fact of the quantity of tonnes that are going through the plant. It's 240,000 tonnes a year of barite production versus about 220,000 tonnes a year of silver Z and zinc concentrate production.
Okay, I was going to ask you about barite further down the conversation, but I think let's talk about it now, and I'm going to come back to the granularity of any information you can provide. So it's a total market of about 8.6 million tonnes per year. You're going to deliver about 250,000 tonnes into market at your peak production. Are you concerned at all about the sorts of effect that may have in the market? Because that might put a little bit of oversupply, might affect the pricing.
Yeah, the barite market's quite opaque, and so we rely on averages. So we know that the European average price for API grade barite, so that's drilling grade barite, is about $200 per tonne, and that's delivered. Delivered Bergen, delivered Aberdeen, that's the sort of price you're getting. We have used, the headline number was $150 a tonne, but what we also factored in there was $70 in transport and handling charges. So transportation, about $30 up into by seaborne up into Northern Europe. And then another $40 from Barish to Ploče, and about another 20. And of that, about half of that was purely for port storage of vast quantities. So that in itself creates some opportunities for us to look at how we handle logistics. Can we do more just-in-time shipments to port of our containers? The one thing we've got here in Barish is a large area next to the rail siding, which is available for us to acquire or lease from the municipal government, that may present some opportunities in terms of how we do that. And we'll be talking to some of the shipping companies about working in partnership to basically minimise the amount of containers that we have stored at that port at any one time. But just to put it into context, we'll have about 2,000 shipping containers being moved at any one point in time from here. This is a big logistical operation. We're going to bring in some specific expertise to help us with that. And we think that there's some potential cost savings that we will be able to capture in the future by being thinking a little bit outside the box about how we might do that. Okay, so
you've made the assumption of 150 there. I think the question was really around, do you think that's a little bit toppy? I know for this PFS, you've used, gold at 1900, you've used silver at 24, and I think you've stuck with copper, zinc, and lead at the previous PEA levels. But you're famously known for saying, I'm only interested in market or forward price, right? So that's so you're not trying to hide anything. I get that, but you're quite aggressive with your pricing. And so therefore, when you go and chat to banks about financing, when you're going to have to do that, and they're going to just rip your numbers apart, aren't they?
No. Well, how can they rip a number apart when it's the market price?
But they're going to discount it. They're going to discount it because things go wrong. Come on, you know this.
They're going to discount it, and I'm going to go, so what? This is a high margin project. Fine, make silver 20, make gold 1,400, knock yourself out, do your best. It's not going to change the financeability of the project. It'll mean that we have to be quite careful in looking at some of the covenants that are applied in those project financing documents. But it's not going to have a huge impact. And Matt, I keep saying this till I'm blue in the face, and I think it's probably my background as a trader. There's only one price, mate. It's the market, right? It is what it is. Yes, I can sell gold tomorrow at $1,500 an ounce if I'm stupid. But what can I sell it for right now? Is spot. That's the price. So, we see a lot of studies that are put together where these very subjective prices are being used. Well, we could use this, that, or the other, or the price in 3 years might be this. We see a lot of guys use analyst consensus. Now, analyst consensus is just an average of made-up prices. It's not real. The real price is the spot price. Use it. I don't know. We should just change the rules and make everybody use the spot price of these studies, then we wouldn't be having these debates.
There you go. I said famously. There we go.
There you go. I'm not going to change my position on this, I'm afraid.
Okay. Okay. But you know what I mean.
We do have sensitivities in the release. Yeah.
I get that.
Impact on.
No, I get that. But if you're sitting in front of a bank, they are going to discount it because they're factoring in not what can I get for it tomorrow. They're factoring in what could the price be, next year. What happens if something goes wrong in the market, at site, wherever. And you've got to make those allowances and say, can I stomach that potential risk? So, discounting is normal practice for financing. So I'm not talking about what could you get tomorrow. So you go. Look, I'm not saying this is not this is a good project at whatever, I suspect I know what the discounted price may be. It's still a good project, stands on its feet. So I'm not arguing that point. I'm just saying that you're going to come up against that argument for sure.
And I am happy to have that argument. Banks will apply their own forward curve. So they'll use their own analyst recommendations for what they think that price will be. If you're financing a project using offtake, for example, that offtake financing will be based on the forward curve, which coincidentally is based on the spot curve, and all of those markets are currently contangoed. So if we start to see backwardation in those curves, we'll certainly consider the impact of that. But at the moment, there is no backwardation.
Yeah. Okay. Fine. You'll make that call nearer the time when you get there. Okay. So let's talk about some of this. Go back to this detail that the market is asking you for, and you said that you'll maybe put out some more detailed information on. So, for instance, I couldn't help but notice that there was no separation of copper from the concentrate, and you did say after the PEA last time that you would do that. We did.
So we did some test work on creating a separate copper concentrate. We created an amazing con. It was high-grade copper. It was high-grade silver. That would have given us better payabilities than what we had projected in the scoping study. We then went on to do the sequential test work on that because ultimately we've still got to produce a lead-silver con. We've got to produce a zinc concentrate. We found that as a result of producing the copper first, there was actually degradation in the subsequent concentrates. And when you looked at it in aggregate, you were better off sticking to a lead silver con and a zinc con. And what we have introduced, which we didn't have in the scoping study, is what we're calling a pyrite concentrate, but it's basically a gold silver concentrate. It's only small quantities. And then obviously we've got our barite product as well at the back end. Where we think and I'm happy to, absorb constructive criticism on this. And I've seen a bit coming through a number of calls with various people over the last 48 hours or so, is that we probably should sort of separate the project out from metals and industrial minerals so that we separate the barite out, because the barite, because of its tonnages, it does tend to skew the numbers a little bit. And I think in some of our forward communications, we'll make that clearer to people as to, what is the economics of the metals project, what is the economics of the industrial minerals project. And it's difficult to separate them because in reality, the metals are contained in the barite hosts it all. So you've got to mine the barite. It's coming out of that hole whether you like it or not. But the barite margins are minuscule. I mean, at $50 a tonne, so just, headline revenue price, $150 a tonne, $70 in transportation costs, plus processing costs that are higher than the average the margins on it are minuscule, and honestly, I wish I didn't have it, but I do. And now my challenge is to sell it because I don't want to have to store it. So we're going to be doing quite a lot of work on the barite market. We are going to be having a number of discussions. The pricing we have set there, I guess, is based on a concept of what we call penetration pricing. There are existing supply arrangements between producers of barite and off-takers of barite. If we're going to displace those existing arrangements with that quantity, as you mentioned earlier, it's a reasonable quantity in the context of the entire market. If we're going to displace that, we're going to do it through price.
Okay. I think there may be a reaction in the market to that, and it's interesting how you deal with it. So whether you do this at cost, just to be able to get rid of it because it removes any future liability, we wait to see your decision making. But can I ask about polymetallic? This is a generic one, right? Polymetallic companies, you've got to have a forward view on what commodities are doing, because last time we spoke, you weren't talking about silver per se, but silver's doing its thing at the moment. I think there's expectation it will continue. How do you get the formula or the flow sheet for the concentrate, agreed? Because you can't change it sort of midway through. You can say, this is what we're going to be doing going forward. So there's made a conscious decision there as to what reverse concentrates need to be able to do. You said copper degrades everything else. So therefore, maybe it's not such a smart thing to do. But originally you thought, well, maybe we will do that. So
it doesn't degrade everything else if you get the copper to go into your lead silver comp. You get a lower payability on the copper. Our market research has suggested the payability will be lower. But if we can get the copper above certain grades, then it helps. So the way we've looked at it, and I guess the underlying premise here, Matt, is that our head grades are so far, right through the mine life at Rupice, are so far above the economic cutoff grade that it gives us a lot of optionality. So the way we've looked at the mine plan is not really on, we did a lot of test work on variability of metal assemblage, of grade, and what we've done is we've taken that, we've run multiple regression analysis, and we've come up with metallurgical curves that say, well, based on the mineralogical domaining of the deposit, and we have basically 7 different sort of categories of mineralogical domain, we've designed a mine plan that in the early years means we can just mine and send it straight to plant. But in the latter years, we're actually stockpiling and we are blending some of those ores. Now, that's gone into our processing cost. And the reason we're doing that is we want to create a fairly consistent concentrate product throughout the entire mine life, so that we don't sort of get to year 7 and go, gee, our existing supplier or smelter in Korea can't take this anymore because this metal grade has dropped below this threshold, or the sulfur content's too low, or the iron content's gone too high. What we've done is created a product that we know that we can sell in every single year in the mine life, or every single month of the mine life. And that has had a little bit of impact on cost, as you'd imagine it would do, in the processing costs. But it does mean that that's a big, substantial de-risking of the project. When you look at polymetallics and you're trying to get maximum value for them, for those concentrates, the work that Graham and Alma and the team have done mean that we are going to be able to create those very saleable products right through the mine life. We're going to be doing more work on that. It's been a very interesting exercise for us in looking at that. What we also did in the mine plan was we mined through inferred resources. So we calculated a reserve and we mined the reserve. But in getting to the reserve, we mined through inferred resources. Those inferred resources were 0 graded. So we said they're going in the plant, but they've got no grade in it. They do have grade in it. Not as much grade as the reserves, but they do have grade. And that also had an impact on the model, but in reality is the right thing to do. I think we've put together a model which, you can have your view on commodity pricing, but, at 1,500 gold and $20 silver, you lose about 100 million in NPV8. It's not the end of the world. We think it's really robust. For me, it's a model and a study I can use for project financing, and that's what I wanted to do. That was the sole purpose of doing that.
Yeah, I get it. Look, the difference between the PEA and the PFS seems to be commodity price. Okay, so what, in summary, would you say? Because that's the market working on your behalf there. So it was either a really good PEA, or you haven't been able to work out or eke out any more value in that process. I mean, what would you say?
So I've reduced my mining costs by about 22-24%. My processing costs have gone up largely because of the barite, but also because of, in the latter years, some of the ore sorting. I substantially reduced my mine throughput from Via Bacha, so we just mined the higher grade material and kept the strip ratio reasonably sensible, so it's about 4-1. My transportation costs were the ones that were disappointing. That's been the big increase. Gone up quite substantially, but we've got work to do there to improve them. So metallurgical recoveries are up. So there's some positives and some negatives there. Obviously, we've incorporated now the pyrite concentrate. There's a little bit of revenue that adds about 40 million to the NPV through the sale of that gold and silver. And in terms of payabilities, obviously our gold payabilities are now, from 48% up to 70%. These are all very positives. These are things we can continue to work on over the next 6 months while we're doing the definitive feasibility study.
Swings and roundabouts.
But I also think that we have got still a lot more localization of costs to do. We are developing a procurement policy here that's going to encourage and incentivize local suppliers to create the products we need. In Bosnia, these will be lower cost. There's certain things we can't buy in Bosnia, but there are certain things we can, such as flotation tanks, thickening tanks, etc.
Okay, so it's swings and roundabouts. It's refining costs, shaving costs where you can, and as you say, I think you've probably got a bit of work to do on transportation and a few other places. You had a visitor this week, didn't you?
Yeah, we did. We were very pleased to receive a visit from the Prime Minister of the Federation of Bosnia and Herzegovina and the Minister for Mines, Mines, Energy and Industry. It was great. It was, I think it was a really strong endorsement of what we're doing here. He voiced his support for the company and the project. I think he was impressed with the young local team that we've assembled here. A lot of our staff are almost straight out of university that are being trained up by old farts like Graham, and Mike, yes, and myself. Thank you, Matt.
Sorry, for everyone at home, I just pointed at him. Like us. Okay.
Yeah. And I think generally, we enjoy the support that we've had from government in Bosnia. But I think with such a strong endorsement, that support will continue and hopefully accelerate.
Well, you're probably worth a few quid to them, aren't you? You must be relatively important to that country.
Yeah, I think during the major capex years, you'll be contributing about 10% of foreign direct investment into Bosnia.
Wow.
It will have quite a substantial GDP impact during the life of the mine. Corporations taxes are likely to be around $200 million US. Concession fees close to $30 million, plus all of the employee taxes and social security contributions, which I don't have a number on yet, but probably will be in the region of $300 to $400 million. So, in the scale of the Bosnian economy, that's quite significant.
That should help a lot when you're in discussions about getting things done, won't it?
Look, I think here the project has a profile, and it's probably viewed by government as being such that they want to see it happen as soon as possible. Our approach, and I think I mentioned to this in our in one of our previous calls is we engaged a group in London called Critical Resource. Critical Resource are ESG consultants to the mining industry, both from the banks but also the mining companies. And with them, we set about a pathway to get a social license, essentially. And a lot of that was at a local level. A lot of it was about implementation of policies that would see us develop a groundswell of local support. That local support happened.
Is that COVID thing back again? You still haven't got rid of it. Seriously. Just sort it out. Just sort it out, would you?
Everyone smokes in Bosnia, and I'm ashamed to say, when in Rome.
Really? Really?
Yeah.
You're too old.
Yeah.
You're too old for that shenanigans. Stop it immediately.
Man, I'm not. I may look like I'm 47. I'm only 23.
Stone. Right. Right. Let's moment of seriousness. But the reason
Thank you very much.
Yeah, it's just pleasure. It's lockdown poppy fat. That's what I'm going with. But I think it's quite important to make that point, because if I remember back to when you guys started off, and probably before, the Balkans was a kind of no-no. It's very, people like you, I don't even know where that is on a map. There's no real mining going on there, but there may have been. But the perception has changed, is what I'm saying. So people looking at you as a different sort of company now, and things like this help. Ministers turning up helps.
It does, but your first comment, Matt, about there not being a lot of mining in the Balkans, when you come into our office and you walk up the stairs up to the corporate floor, we've actually got what we call a living history of mining in the region of Vares, right through from the Saxons, through the Ottomans, the Austro-Hungarians, and into the Yugoslav era. There is a long established history of mining here. The Vares coat of arms are 2 miners. There are about 11 operating coal mines within our canton. There's one base metals mine operating within our canton. I think people came here initially looking for exploration licenses and realised how difficult it was to get an exploration licence, because you've got to go and get municipal consent to apply for a concession to the canton. Then the canton gives you that, and then you have to go to the federation to get an exploration license over it before you can do anything. It's a long process. It's a big barrier to entry. But the way we came into it meant that we sort of bypassed that. And because we're here, we've been able to navigate that very well. And it serves to the point that the work that we've done here, the amount of money that we've invested, the human development we've done in our team, the indirect investment, the sponsorships of local football clubs, rugby clubs, buying COVID equipment for the school, the hospital, etc., has meant that we've secured now the largest mineral concession in Bosnia. We've got the entire mineral belt around Vares, which we were awarded a few weeks ago. That's going to give us an opportunity. It's an 11-year exploration concession. It's going to give us an opportunity to look for those repeats of Rupica. So whatever the Vares project looks like right now, I don't think it'll look like that in 3 or 4 years' time.
Okay. I just think it's an important point that we had noticed, certainly in terms of our analysis. We're doing a report on you, by the way. Hope you enjoy it. We'll be out soon. I wasn't going to ask.
So what do you got?
What?
You're gonna pull Fatty Cronin's CEO?
He's coming. It's front page, mate. I wasn't going to ask about Tathian, but Holly at the office here was particularly taken by the story when we interviewed them. How is that? Because they're now fully on board, aren't they?
Yeah, absolutely. So Fabian Baker, the CEO of Tethian that you're referring to, is also quite popular with some of our young geologists here. They're keen to pick his brain.
He's a very intelligent guy. He's a very clever looking. Yeah.
He'll be here on Tuesday.
I'll tell Holly.
He actually is a very clever guy. He's one of the more competent people I've met in this industry, and he's joined us as corporate development. Mm-hmm. So he is going to be helping us with our expansion strategy here in Bosnia and Serbia. We have completed on the Tethyan acquisition last week. We are drilling there with 2 rigs and a 3rd rig coming in this weekend, I think it is planned. We're conducting a 12,000 metre expansion program, so we are now drilling in areas that have not been drilled before. Some of them have got some adits in there that we've got a little bit of data, but some of these holes that we're drilling through are totally new areas. There'll be results coming out consistently. Just to all of your viewers who are paranoid and think that I'm holding back results, I'm not. They have been sent to the lab. They were received at the lab yesterday. They should be out in 2 to 3 weeks. Okay.
Fantastic. Well, Holly, we'll look forward to hearing that news. You put an announcement.
We'll get Fabian to present them.
I think you should. I couldn't help notice an announcement about the EBRD. Why did you feel the need to make that?
Look, one of our staff was doing an investor evening and made an unintentional disclosure about EBRD. We felt that that required clarification, so we put a release out to the LSE the following day. Yes, we are in discussions with the EBRD, and I think as we said in the release, there is no guarantee that those discussions will end in an investment. But you know, EBRD are a very influential organisation in Europe, but particularly in the Balkans, where they are funding a lot of various projects around the Balkans. But the one thing about EBRD, I think people have got to recognise, is the international ESIA that we are doing. The scope of that is actually shaped by policies that EBRD and IFC have developed. And they have extremely strict and rigid environmental and social standards, which any investment by them into a company, whether it's debt or equity, requires you to comply with and report against. So, you know, I think companies like us who have a very strong ESG profile, who have been working, you know, very early in the project development to build that social license, to observe the highest environmental standards, to have a good level of social integration, and are supported at a board level by very strong governance and policies and procedures, obviously are attractive to organisations like EBRD, who are willing to potentially put their money behind and also their reputation behind.
Okay. Well, Paul, I think that's enough of a run through from me. I'm kind of keen to see this bit more granular detail out of you guys in the next few weeks, or however long that's going to take. It is a few weeks, isn't it? Before Christmas. Fabian's working on that for me right now, so I'll get him to present it. You can get Holly on there as well if you like. Beautiful. We'll do that. But I think in terms of, for people like me being able to do analysis, I'm going to need a bit more information, because I can only go on what's public, right? That's how we work these numbers out. I say it's a good project. I just want to know how good. So when that comes out, be great to get a hold of that. Nice run through. Things seem to be going well. You're on site. No problems apart from the cough.
Yep.
All good?
No, I've been here for 5 weeks. Things are going very well. I am heading home next week, and I'll be back again in November. But things are going really well. I'm really, really pleased with the team and the work that they've done here and what they continue to do. It's going extremely well.
Brilliant. Okay, Paul, thanks for the update. We'll speak to you soon, okay?
Thanks, Matt.